Why is mortgage protection the most profitable way to grow and scale your agency, not only in 2025, but honestly, every single year going forward? I'm going to break down step by step why I believe and what we've seen. We work with over 550 agents to issue pay $40,000 per month. We now helped over 4 agencies grow from $250 to $1 million a month. And on this channel, all I do is focus on explaining how you can hit those 40K months or how you can scale your agency, what's working, what's not working, and different strategies and suggestions. So bear with me. We're going to hop into this. I'm going to do a deep dive on what I've seen and also what seems to be relatively true in regards to expectations for leads. So for me, the way I look at it is this. So there's tons of different lead types, okay? But every lead type is not created equal when it comes to scaling, right? Specifically scaling, because a lot of times we think, okay, well, my agents are making money fast. That means that it's easy to scale. And while that may be inherently true for the first few months of insurance, if you work, and I'm referring to agents who are doing non-medical underwriting, issue paid, commissions that's coming out, and you're not doing like a month to month type of thing, but you're getting, a 9 or 12 month advance. This is who I'm referring to. Typically, right, we see simple being the most effective at first. Yes, I agree. And what is simple? Final expense or vet final expense, right? That's simple. But caveat, there are more effective ways to get results with subtle difference. You're probably like, what does that mean? Okay, so when I say more effective, I mean bang for buck. So yes, let's just say the time takes to learn FEX is 2 weeks for an agent to learn FEX. So what I mean by that is like they can go through an entire script, they can handle some common objections, they can close out a policy, right? The thing is though, the average AP for FEX ranges anywhere between like $800 to about like $1,100. That's typically, now let me take a step back. Can you close more? Yes. I'm talking about the average. This is the consensus across everybody. If you're an agent or an agency owner who smacks final expense out the park because you know how to build value and like equity and whatnot, cool. I'm still going to be speaking to you, okay? Because that's the average annual premium. Now you think about the stickiness. Now, when I say stickiness, that's my way of basically just saying persistency, which in other words, I'm saying, does it stay on the books? Okay. Now, when you think about final expense, understand the demographic. You got 50 to 85-year-olds who are scrolling all the time. Now, we're not going to get into the breakdown because I'm looking at like profitable wise, but we're not going to get into the breakdown in terms of like ads. I have other videos where I explain exactly why specific demographics are more or less inclined to be a higher or lesser intent, right, than others. And it's simply just because of the way that they're marketed to and their demographic behaviors. It has nothing to do with the actual leads, right? It has to do with the behaviors of the demographic, which therein are leads. People are like, well, these leads aren't good. No, the demographic is not established to do what you want it to do. You want a demographic to pick up the phone, know what it is, be ready for their appointment, and have money and be available all during the day when you can call them. That's not realistic. You have to understand and set your mind for what's actually real, right? You want to do things that are simple. You want to do things that, sorry, not simple. You want to do things that are easy. You're going to get what easy results get. And that means everybody can do it. If you want to do things that are hard, right, but still simple, that doesn't mean everybody can do it, right? Or everybody can do it, they won't do it. That's the difference, okay? So 50 to 85-year-olds are scrolling all the time. Now, why is this important? Because when we talk about persistency, this means they are higher percent of looking for cheaper options. That does not mean that they're looking for more valuable options. That means they're looking for cheaper options, which means if there's ads running all the time, so 365 days, then more likely to click on another ad and talk to another agent who undersells them based on price. People think inherently that all chargebacks are just because people aren't good with managing money. Yeah, I know how many leads I get. I had this lady just this week. I swear to God, I told all of our partners, I said, if you see this lady's name come through the ads, just disregard her. She's filled it out 15 times. We counted 15 across 4 different agencies who are running vet leads. 15 times. Now, because I actually see and I work with these agents and the agencies and I see day to day, I'm literally telling them, like, you don't understand the behavioral demographic of the clients that you're dealing with. Yes, it gets you money fast. Yes, you can smack policies out the park. Yes, it's really easy for you to teach agents, but it's not the right way to build your business brick by brick by brick. It's not. It's not. And if you do build it like that, which there's really no issue with it initially, like you need to have a stepping stool for them to get to, because your agents at the bottom, dude, there's people struggling, man. I tell this all the time, bro. Like, the reality is this. A lot of these agency owners are broke, man. They got chargebacks galore. A lot of these IMOs, they're not really making what they say they are. And I hate to be the person to break the bad news, but it's true. I have agents who reach out to me all the time, like, bro, Trey, I want to work with you, bro. What's it look like? And I'm like, yo, cool, man. I would love to. But I'm starting to notice now, like, why are you all doing that? Like, I left, I had my story, I had chargebacks myself, but it was me. I did that. I wrote bad business. But people are building teams on people like me, who I was a top agent, made a lot of money at first, but then I had a lot of chargebacks. Fortunately enough, I went to play football. I started the business, right? And then for anybody that follows me, that's the rest of the story. But like, I'm putting a pause here because that's what you're building your business on. You can't run away from that. People are like, oh, well, I'm gonna do it like this. No, 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 no. If it's too easy and too many people can do it, then that means that people that come in, right? So there's a gap, right? Here's the thing. Here's why I don't love this demographic, except for the first month. And by the way, let me throw a caveat. I'm not saying that I don't like final expense or vet. I love final expense and I actually really like vets. I think that they're good. I think they're good for you to start with. Get a few wins or maybe even age leads, maybe some fresh leads, and then transition your people. You're going to lose tons of agents. People aren't going to be profitable. Think about this. How many true, like, hey, I just run final expense by myself can I do? And here's the telling tale of whether or not something's really profitable. If you took an agent out of their situation, would they continue to do the things that they're doing over and over and over again forever? Do you want to wake up and have to dial for 13 hours a day? Is that how you want to build your business? Now, can you do that with other people doing it? Yes. But you, like, if you took yourself out of it, if you just like, if you said, hey, what's the most ideal situation that I want to be in? Like, if I want to help people, right? What's the most ideal situation I want to be in? It is not you dialing for 12 hours. Dialing for 12 hours is what you need to do to gain the skill set to get out of that situation to then do something else. So if that's the case, then the goal should be do that for a period of time, right? And then you're going to separate and grow to then learn how to do a different skill set, which inherently should be, in my opinion, going after mortgage protection or homeowners. Just simple, right? Like, there's really no other way around it. I'm thinking more or less about, like, I mean, all of my mortgage protection agencies, they're the most profitable. They're the most happy. They have the least amount of chargebacks. Their teams are the most consistent. They write the highest annual premium. Like, and it makes sense. If you go watch my demographic video, you're going to see exactly what I'm talking about when I go through each individual group and why you get the results you get, how much you can sell. It's very, very important. But understand that there's this gap, right? There's a huge gap. And inside of this gap is a few things. So when you go from final expense to mortgage or / homeowners, there's a gap. And what is that gap? It's skill, which requires time, effort, and sacrifice. Okay, which I guess time and effort is sacrifice, but you get the point, right? And you got to suck. Have to be willing to suck. This is my final expense to mortgage equation. Right? And the way I look at this is like, okay, I work with final expense agents. I've seen one of my top clients, I mention her all the time, Gio, she doesn't care if I drop her name. She's an absolute savage. And I watched her go from final expense doing 15. She talks about this I have 2 interviews with her actually. She talks about this. going from final expense to mortgage protection and never looking back. The amount of mortgage protection agents I talk to who are like, yo. Once I figured out that I was good at running mortgage protection, I never wanted to run anything else. Why? Because you can still sell everything. You can still sell final expense. You can sell advanced markets and planning. You can sell retirement plans through IULs or whole life or whatever your prerogative is, right? And you can sell, I think I already said final expense. You can sell term. You can help them protect their assets. You can put them into an annuity. It's endless because it's the most niche demographic, if you want to call it is. Now, I'm not nothing against these other ones. Like, I love the fact that there's others, and I'm sure I'll probably figure out how to generate it. I do mostly just to say that I know I can and help people get results. And then after that, like, I'm good. My bread and butter, honestly, if I'm being transparent, has always been IUL, mortgage, and final expense, and it will never change, right? Because at the end of the day, all these subcategories are just that, but for specific niches. And I think that that's great. But the problem is when you talk about the advertising, right, which we'll get into a second. So you want to think about there's the gap in skill, okay? There's the advertising. And by the way, guys, the way I come up with these videos is like I literally take conversations that I have with my clients, and then I just bring them to you, and I talk through like what we talk through. So, right, so you have the gap in skill, you have the advertising. I don't know why I did that. That's bad. You got the ads, and then you also have profitability. Okay, so we're gonna go through gap skill. Next, we're going to ads, and we're going to profitability. So gap skill is this time, effort, and sacrifice, and you have to be willing to suck. And the reason I was bringing Gio up, just to circle back, is that she specifically was working the leads for final expense and took the time to not know what she was doing. Because in her mind, she said, there's a few things I'm gonna get once I get over this skill gap, right? I'm gonna have a difference, which we'll go down in here, in profitability and average AP and stickiness. We're going to go back up because that's what I started with, right? This is the summary of what we're going to be going through today. This is actually like the reality of the situation, okay? But I knew that I would be willing to get there, right? I knew that there's not a million other people doing it. So if there's not a million other people doing it, that means it's two things. Number one, it's probably harder than what most people would be willing to do, which means that if most people won't do it and go through it, if I can go through it and get it, then I put myself in a completely different situation. Because there's easy things, I'm going to keep reiterating, that's the emphasis of today's video. The easy things, they don't last. The easy things means everybody else can do it. And more importantly, the easy things mean that new agents can come in with no sort of expertise, pitch a concept to a client, they believe them, and sign up and undercut you. Chargebacks, man. There's only so many people you can market to in the specific niches. And then it's like, because of the demographic, as I just said above, they're looking for cheaper options, right? So that the willingness and the time and the effort to actually suck, the money that has to be spent to do that, even if you go down for a month, it is worth the 4, 5, 6 weeks of you sucking. Let me give you a quick story. So me personally, right? When I transitioned from really doing final expense to mortgage protection, here's what happened. I was doing final expense part-time, and I was doing about 10 to 15K. I went full-time in September of 2021, 2020. I don't remember. One of those times. I went full-time. When I went full-time, my first month, I did like 22K. So I only went up 7K, right? Then my second month full-time, I think I did 23K, I want to say. And at the end of October going to November, my mentor at the time, or my upline at the time, I apologize, he was like, yo, you live in Nashville. I fly from Idaho to East St. Louis, okay, Illinois. He's like, I go out there and I write like 10 to 15K in a weekend. I was like, yo, there's no way, bro. 15K in a weekend is crazy. Mindful, we're still running in person. We're not doing anything virtual. He's like, it's going to be a lot. If you have a credit card that can handle it, I'll pass these mailers off to you because there's other areas I can run, right? And once I pass these mailers off to you, you can go up there and run them. I said, oh, bet, I'm good. Like, I believe in myself. I'm doing 20K. I want to get to 40 because the goal was to get to 50, right? We had this challenge to hit 50K. My first month, I go from doing 23 on final expense with like, I was spending, I think it was like 1,500 a week, to now I'm spending like $3,000 a week. And it was like, yeah, at one point it was like close to $3,000. yeah, I almost spent like 10. I was spending the same amount. It was about $3,000 because I spent, no, 2,500. I apologize. I went from 1,500 to 2,500 a week, and basically all that extra cost was just on these mailers. I'm getting smacked with mailers, just absolutely murdered. And it might have been more than that if I'm being transparent. But the moral of the story is I start spending more and making less, right? But I knew that if he can make 10 to 15K in a weekend and I'm making basically 20K in a month, if I can just figure out how to make that 10 to 15K, and I only go twice a month because it was a 5.5, almost 6 hour drive. If I go twice a month, that's 20K. And then during the week, if I can write another basically 10 to 15, 20K throughout those 4 weeks during the week, that equals up. And then on the weekends, right, I could do a little bit. That equals up to 40, 50K. That was my game plan. First time I go out there, I think I spent, I want to say the first weekend out of it, I may have spent like 2,000 because I didn't buy many leads that week because I let them fill up the week before. I go out there, I wrote nothing. Like 2,500, I don't think I wrote anything at all that whole weekend. I booked 16 appointments. I only had like 3 show, right? And then the other 12 didn't. And I had driven out there on my own. I came back so sad. I was like, dude, I'm down 2,500. I didn't do anything. And guess what my upline said? You just gotta try it again. That's what people weren't soft. Like people are so soft now. They're like, oh my goodness, I want you to run my ads. I want you to set everything up for me, and I don't want to pay you. You know what I mean? Like $3,000 is a lot. I'm like, okay, do you understand in certain industries, right? And basically every other industry, $3,000 to run somebody's ads to make them 20, 30K is nothing. They'd be like, yeah, bro, cool. It's $3,000. Like, here's the problem though. Most people don't use their money right. Most people are sitting up in chargebacks because they're running the wrong leads or they're doing what somebody else told them to do instead of what's actually profitable. They're like, oh, I'm going to go try these. And it's like you make some sales and then they charge back. You're like, oh, shoot, this is how the business works. Like, yeah. It's like, no, it doesn't have to work like that. That's just how you were taught, right? So inherently, you're sitting here, you don't have any money because you can't afford to pay somebody $3,000 to run your ads, which is insane. And you don't have enough for ad spend, which is also insane. If you're doing 20, 30K, which you're not doing 20, 30K, I'm not trying to be rude if you're there because I've been there, but I'm just telling you how to get out of that situation. Then like at the end of the day, you say, okay, cool, well, I'm gonna make a change. But the only way you can make a change is you have to be willing to put up more money, be willing to suck for a while, sacrifice your money, right? Put your effort in because you're gonna get kicked in the face and be like, damn, and it's gonna take time. But if you're willing to make that difference, here's going to be the next thing. Now, when it comes to ads, right? Let's talk about a few things. Okay, let's just talk about the most straightforward one. Let's talk about the intro to phone call. Why are you saying that with ads, Trey? Because your ad and what you say are in perfect alignment. If they are not, there's what we call friction. I've talked about this in other videos. If the ad itself is trash and your intro is good, you can still overcome it, but now you just have unnecessary friction, right? So there's 2 types of friction. Okay? You have necessary, you have unnecessary. Y'all know my spelling is not great, right? Necessary friction is going to be like adding more questions, like OTP, making it more difficult, right, to opt in. That's necessary. Unnecessary, to opt in. Unnecessary friction is literally you saying, okay, you lack context on the ads, right? It's not enough questions. And then there is no transparency. Okay, so adding more questions is like, hey, a form has name, email, phone number, state, beneficiary, and to have necessary friction to make the lead better, you add, when's the best time for me to contact you, right? I'm just making that up. I say it's an open-ended question or a multiple choice. Then you have OTP, okay? So it's like one-time passcode, put that on the lead. It creates necessary friction to make them take the extra step. Because if you're confirming your phone number, why would you be doing that unless you're either sending something or getting reached out to? At the end of the form, you're not getting something if you're confirming your phone number. It just doesn't make sense logically. And people have enough logic to know like, oh, I don't want somebody to have my phone number. If they're one of those sketchy people, then like, cool, you don't want them. But the sketchy people also like won't give you their social. So it's going to tell you a lot about the behavioral demographic of the individual. And then you're making it more difficult to opt in, which essentially means If you have a Facebook form versus a landing page, you take them to another page, it loads, they have to wait. These are all very subconscious things that make a difference. You don't know where the person is. If they click on it, they have to wait. If they really want it, they'll wait. If they can't just click through real quick, then they're not going to actually get it, which means it's not going to be the type of client that you want. Anyway, so that is what we call necessary friction, because it weeds out the people who lack intent, who lack actually wanting to progress or move forward, and they don't fit the behavioral demographic that's going to actually help you close deals. Because understand that regardless if you do final expense or mortgage, there is a behavioral demographic that is going to do the things you want them to do, meaning they're going to opt in, they're going to show up to the call, they're going to give you your social. Now, whether or not you close them, you can't have a behavioral demographic that's just closable, because then everybody would run ads to that. But you want to get as close as humanly possible to the demographic that would be willing to do the things you need to do. Show up, remember what it is that they filled out, be willing to give out their social, be willing to get their spouse on the phone, actually respond to your text messages, be willing to actually keep their payment on file, like be consistent, be somebody that, like, these are behaviors. People think just leads, you got to think demographics and behaviors. So unnecessary. You lack the context on the ads. So this is the biggest thing. And this is where you can do well as a marketer, and even the agent can do well. But if the demographic is off, then you're just completely cooked. So what I mean by that is you're calling somebody and the ads, I talk about this a lot. So you're calling somebody and the ad says state regulated burial plans, right? And you call and say, hey, it just says state regulated burial plans, and the ad is from Google, right? And you call and say, hey, you were filling out a request on Facebook for the life insurance plans, where you listed XYZ as beneficiary. Now, you could have gotten the same name, same lead, name, email, phone number, state, beneficiary. You call that person, you say, hey, Jane, giving you a call back about the Facebook ad that you filled out for the life insurance programs. You listed Jane Doe as your beneficiary. Is that correct? And they're going to be like, no, I don't know what that is. Get out of my face. Hang up. Boop. Right? Or you call the person and say, hey, Jane, give you a quick call. So it looks like you were on Google. You clicked on one of our, little hyperlinks or whatever you want to call it. And Jane, just so I have clarity here, this was for, the state regulated burial plans. You listed, Sadie as your beneficiary. Does that ring a bell? Yeah. Okay. Why did you understand that? Because you knew and understood what the client saw. If you lack context on the ad, that creates unnecessary friction, which means now the client is confused. And most people think that it's a lead problem when it's not a lead problem. It's just you lack context on the ad. Now, on the other side, let's say you do get it right, but you're dealing with the wrong demographic, a poor demographic, not financially poor, but poor in regards to the behaviors that you need them to have. They lack them. So they don't remember what they filled out. So you do call Jane and you say the same script I said, and they're like, no, I didn't do that, blah, 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 leave me alone, and they hang up, right? That's unnecessary friction. That's them lacking context. If you lack context or if they lack context, they're still the same thing, but that's unnecessary friction because that's just based off of the demographic. There's nothing inherently that you could have done, right? You're not asking enough questions. So now in that same scenario, it's because of the demographic, you don't ask enough questions, you don't get the right answers, or you don't ask enough questions in general, right? And then people are like, oh, wait, what is it? Well, here's the thing. When you're doing mortgage protection or final expense, if you don't do any of these things regardless, you're still screwed. It doesn't matter. The difference, though, is that with final expense, typically, you can't do these other things. When you ask a bunch more questions, it doesn't change who they are. They still don't have the behavioral tendencies. You can ask 10 questions. They're still going to be like, wait, what is this? You can throw OTP in there. Yes, it helps. These things subtly help. But here's the cool thing. With the ads, you spend less if you're doing mortgage because you don't need all those things. Why? Because they already fit that demographic, okay? They already understand what they filled out. Here's a perfect example. I run leads for IUL. I have IUL leads, name, email, phone number, state, age. Why can I do that? Because the ad and the way we tell the client what to say, meaning the agent, are in alignment. Also, because we're targeting a demographic that remembers what they filled out. If you're dealing with a bunch of 30, 40, and 50-year-olds, they're less likely, if you do the thing I just said, add the necessary friction to then create unnecessary friction, right, on their end. And that's super important. And if you want, I can make another video of that. But that is essentially the difference. Like that, once you understand that, you're like, cool, I know that. So when you have ads, your intro to the phone call has to be in alignment. With final expense and with vets, they're filling out a million different things. So there's all this unnecessary friction, right? They lack context on the ads. You typically lack context on the ads. You can't ask enough questions. You ask more, it doesn't really make a difference. And then there's no transparency in regards to like them letting you know, like, dude, you filled this out. Like, I have your IP address and everything, but that doesn't matter because of the people that you're dealing with. And because you're dealing with those people, right, then it's hard. Now, on the other side of, mortgage protection, and I've talked about this, the only really bad thing is that they're harder to get in contact with. But here's the thing, all these leads are hard to get in contact with. So why would you not, when it is hard to get in contact with, put the highest person, when they pick up the phone, they have the highest remembering to fill it out, and then the most likely to actually go through, move forward, keep their business on the books, not be filling out 15,000 different things later, and then actually just get it taken care of, okay? So that's ads, right? Like, and the most important thing is really the intro. Outside of that, that's for the call part. Outside of that, from a marketing standpoint, yo, there are so many, like, you can just take my word for it. Go to the Facebook ad library because there's nothing to hide. Everybody understands. You can go to Facebook ad library, look at everybody in the world's ads from freaking Alex Hormozy all the way down to, XYZ who just started. So there's nothing to hide. Go to the Facebook ad library and type in veteran final expense, veteran life insurance, veteran IUL, type in final expense life insurance, and then type in mortgage protection and see the difference in like who's running ads and who's not, because most people can't figure it out. They don't know the targeting, they don't know what to say. Like, it's not as easy and straightforward as people would like it to be. Then you go to something like IULs. Dude, people are on there just saying, yeah, you get $1 million for this, and look, all your money tax free. And it's like, dude, take a step back, man. No, you're not. And guess what happens? You get a lot of people that are just filling stuff. So it's like, say, vets, filing, like you go to truckers now. People are doing truckers, which is basically just like a demographic that's just selling them life insurance. And it's like, there's nothing inherently wrong with it. And I love the idea of it. I think it's great. I think that, you can scale it up. There's people that are killing it. And I've said this in other videos, one of my homies in the space crushes it on vets. There's nothing wrong with it. I'm saying it's not the most profitable. That's all I'm saying. It's just not the most profitable. It's not that there's anything wrong. It's not that there's anything bad. It's just not the most profitable, right? And if you got to this video, I appreciate it. If you didn't get to this part in the video, I appreciate it. I'm sure some people may have took that the wrong way, but that's it. So from a marketing standpoint, if you have way more ads and it's super, super easy for somebody to throw up a vet ad or a filing expense ad, then what do you think that requires? Not a lot, which means that more people are doing it, which means that it's more difficult and you're creating unnecessary friction. More unnecessary friction, more clients not knowing what's going on, not being transparent, can't ask enough questions because the demographic and the behaviors of the demographic are easy to market to because they are clicking on stuff. It makes so much sense when you break it down, right? So once again, we go back up to what you have to do. You have to be willing to put the time in. You have to be willing to spend money on the leads to figure out which one works for you. You have to be willing to put the effort in, okay? Profitability, okay? Now this is the bulk of the meeting today. My bad. I don't know what happened. This is the bulk of the not meeting. The bulk of our conversation today. I just got lost from my thoughts. I had to pause something. The bulk of our conversation today is on the profitability. Okay, so what I mean by this is really simple. We just go back up to this example. That's the average annual premium for final expense. So if we go back up to this and we go through the demographic of these two, and we look at just like what you're getting right here. And my bad, let me do that. Okay, so that's final expense, and then you look at something like mortgage, right? An average annual premium for a mortgage is typically on the low end, you're looking at like $1,500. On the high end, sometimes it's like $3,000. Okay, so just alone, you're basically doubling everything you're doing. Now, here's the thing that most people don't understand. While it may take you 2 weeks for an agent, as I mentioned up above, to learn how to do final expense, let's say it takes you a month, so double the time, right? But let's just say that you make double the income over a period of time. So what that means is, let's say over a month, if you close 10 FEX policies, you make, let's just say you make 11K. Okay. Let's say it's 11K for a month one. Okay. And then let's say it takes you absolutely the entire month to figure out how to do mortgage, right? So let's just say that in that situation, you make zero, but you're never actually going to make zero. My apologies, because you had to spend money on the leads. So I'm going to actually break this down so you guys can see these numbers. Okay, so final expense, investment. So let's say for you to make 11K, you're spending $500 a week on leads, which is $2K a month. And then you are making 2.5K a week in IP. So that means that you are making 10K IP, okay? So your profit is 8K, okay? This is month one. All right, so it's final expense. And let's say for this one, you got 0 mortgage policies, but theoretically, let's just say that you spent mortgage investment. Okay, and in this one, you have spent, I still would only spend $500 a week. So basically, you're $2,000 in the hole. So loss equals 2K. So you're starting month one on with less than. Like, oh man, I knew I should have did this. And by the way, like I would not recommend that you go in, but I'm just saying worst case, say you want to build your whole agency. You're like, I never want to do it. It's still profitable, okay? So that's how we're gonna do it. So now that's month one. So now we're just gonna take these simple numbers. I'm not gonna go through all this again with each one, but now let's just say it's like month two, right? Compounding effect. Now you basically made 8K plus 8K is 16K profit. But let's say month two now, this is what final expense. For now, let's do the same equation for mortgage, okay? So mortgage investment. So you spend $500 a week on leads. That's $2,000 a month. But since your average annual premium is $1,500, because once again, we said 800 here. So, or we did 1,000, I apologize, right? So let's do the middle ground of this. Let's say the middle ground for mortgage protection is going to be $2,000. Okay. So $2,000 means that now you're doing $2,000, you're doing 20K a month because you're doing 10 policies. Okay. So that means you are doing 5K a week, which means now you've made $18,000 in profit. So in month two, you have already made more money in just month two by doing mortgage protection, even if you went in the whole 2K the first month. I'm not even going to keep going down the rabbit hole, but if you just kept doing that over and over and over again, you will never compete. You'll be night and day with how much you can make. Here's the thing that we're not speaking about though. This business is not sticking on the books. Your persistency with final expense is like 60%. Your persistency with mortgage is 85 to 90. So you take 85% of this, you take 40% and drop this off. You take 15% and drop this off. You're still crushing. And on top of that, these people are like, it's way more time, effort, energy, all that. For you to just take this L for 1 month and do these things. Take the time 4 weeks straight. Hey, take the effort, get your teeth kicked in. Just, oh, this sucks. This is horrible. Sacrifice your money. You put up $2,000, you make nothing. You feel like dirt, but you got to keep going. Be willing to suck. Okay. And by the way, I forgot to equate this because that's just $2,000. Even if I do this, I apologize, you would be in the hole. So let's just say, no, you'd be breaking even because you're still at 2K because you still have your 2K from the previous month that you spent. So now you're at 6K. You broke even. Next month though, you're crushing. The month after that, you're absolutely crushing. Right? It just makes sense. Like it literally just makes sense. So at that point, all you are doing, remember, this is for 1 month. So just so you guys are clear, because some people are probably like, what do you mean? Let's go month 3, because at month 3, you're profitable, right? So this is what you've made in compounding over 2 months. So if we keep that same trajectory, you make 8K a month, right? Like after, you pay everything, you're essentially going to be making 24K. Okay, this for final expense, just so everybody understands. And then if you do this way, right? So you did, remember, this is the 16K minus the first 2K from the first month. Because remember, first month you lost 2,000, right? This month you really made 18, just so you're clear, right? Minus month 1 equals 16K. So you really broke even on month 2, right? Month 1 you were in a hole. Month 3 though, what is this? Now month 3 you made 24K, but guess what? You stacked another 18K on top of the 16K that you got. So now you do 18 plus 16, that's 36K. Okay. And you keep doing that over and over and over again. You made an extra $12,000 off the same investment because you learned to do skills. And 500 a week on leads means you're running aged leads. You're not even running fresh. Guess what 500 weeks on final expense typically can mean? It means you're running fresh leads. So you're kind of maxing out. You could do more. You can obviously spend 1,000 or 2,000 on final expense, but making 30K off of final expense is not the same as you making 30K on mortgage. So that is how you look at it. That's how you analyze and understand, like, okay, this is the right move for me. And this is how you build your agency. Because once you can do this, these numbers make sense. It's like, dude, I mean, if I can make 12K off the same investment and I'm dialing fresh leads and I'm just working old leads, if I work fresh leads and I put 1,000 up and now instead of making this, I make that, then it's like, oh, I can get the 50K way easier with way less time, right? Way less effort after I put the effort on the front end. It's something that one of my mentors at one point said. He was like, if I do the hard things now, I'll live an easy life later. If I do the easy things now, my life will be hard later. And I was like, yo, that's a banker, but it's so straightforward. And it's the same thing that applies with this. But most people don't want to go through it because they're like, oh yeah, bro, it's fast. Like, get people paid fast. Yes, I want people to get paid fast. And in a perfect world, what you would really do, to be honest, is you would actually do final expense the first month and then use the final expense house money to then fall on your ass for a month. And you'd still be up basically $6,000 because you put another $2,000 up. You made 8. Now you're still up 6 from your first month. Maybe you have a chargeback or two, so you break even. And every month after that, you're good. So you never actually lose. That would be kind of my suggestion, to still get the reps in. That's how, if I was building an agency, that's what I would do. Month one, I would be like, yo, whole month 1, 30 days, we're going to get you to 10K off final expense. The moment you get to 10K, we're taking all of that money and we're putting it into mortgage, and you're just going to suck until you can get it. And that's the thing. Most people they just don't want to do hard stuff. The moral of the story with this video is like, if you do not do hard stuff, you will not get the results that hard stuff gets you. And there's versions of hard things. We're talking about profitability. If you're talking about building a really big agency fast, guess what the hard thing with that is? You could do any lead type, it don't matter. You got to go market, you got to go tell people, you got to post, you got to be willing to get up, communicate with people more effectively than everybody else. You got to be able to drive people, give people energy and want them to believe in what you're doing. Like, if you're not willing to do that, then it's like, okay, well, this might not even be for you to want to grow. But that's the hard thing. But everything is hard. If you're talking about the sales process, what's the hardest sales thing that I can do? Most people won't do it. Let me go after that. Once I figure that out, I'm going to be in a completely different world. And I'll make way more money than everybody else. And I'll have a much easier lifestyle down the line. Right? But if I do the things that are easy now, it'll be hard later. Which hard later, if you're doing this, is like your agents are freaking broke. That's what it is. You have a bunch of broke agents. Hate to say it. You're making a lot of money. They're broke. If that's how you want to live your life, cool. Not mad at it. Respect it. However you want to do it. To each man and woman his own. But I don't want to live my life like that. Like, if I bring people in, I want to make sure they get paid and they eat. Now, can you make sure everybody does that? No. Like, there's no way you can do that. And I'm not saying this as an agency owner who's done it. I'm saying this as somebody who works alongside them and just sees everything. This is the thing. I talk to the agents. I know they can't afford it when their car gets declined and they can't pay for leads. Bro, if I'm charging you $500 a week and you can't pay for leads, it's like, dude, okay, you're not really making the money you're saying you're making. Just call a spade, man. Like, $350 is not, like, dude, if you're running a business, like, $350 for what? Okay, cool, bring me my card. Like, even when I didn't have it, I thought like that, because that's the way that you have to think through things as a business owner, because things cost money. But if you don't have money because your business is not sticky, you got chargebacks, people decline it. It's like, dude, go do the hard stuff, man. You got to go do the hard stuff. This is the hard stuff. What I didn't talk about is how to sell this. That's a whole nother video. You got to learn how to pitch equity. You got to learn how to understand assets. I've broken that down in a demographic video as well. You got to assess it to their needs. If you're not willing to do those things because they take time, then at the end of the day, right, you're not going to have the most profitable way to grow. You can still grow. You can still be successful. As I mentioned, my homie is absolutely crushing it. And shout out to him. Not going to name drop, but my dog is doing his thing. So it's not that you can't do it. And there's multiple others that are crushing it. And kudos to them, right? But that's not everybody. That is very few and far between. Why do they do that? Because they get up at 4 a.m., they go to the gym, they train, they have a really good culture, right? Like, our partners that do that, they're making money and they're doing well. I'm not talking about them. I'm talking about the people who specifically, right, are just trying to do the old school method of building an agency, getting up at 8, dialing some leads, doing filing expense, just want to go local, don't want to get uncomfortable. Like, yo, you are putting yourself in a very dangerous position, right? And I still believe, though, regardless of how it is, this is the most profitable type of lead, if you want to call it, or I like to call them demographic. That's it. So, as always, please make sure that you like, comment, and subscribe. If you're an agency owner doing over $150,000 to $200,000 a month as an agency, we want to help you get to $1 million. That's our goal. We want to help you push the limits. We want to give you all the systems. If you come in, whatever you're doing, we'll keep doing it. I'm going to let you know if you're not doing mortgage, I'm going to try to get you to do mortgage. You're going to go through it, suck. It's just, trust me, it works. People make more money. Or do IUL. I don't love IUL in regards to like, if you don't have any previous experience, if you don't know how to position them properly, then no. But if you do, and you're willing to learn, that as well. Filing expense and vet are bread and butter. But building an agency off of filing expense and vet is just, yeah, that's just my personal opinion, but to each his own. Nonetheless, though, if you're any of those and you want to work with us, cool. We are looking to take on some more annuity agencies as well. Very excited about that. But yeah, that's what this video was about, and I hope it was helpful. You can go to the website and apply. I'm not here to sell you anything because honestly, if you go to the website and you're not qualified, we're just going to send you to our lead website, which if you just want leads and you like this video and you're like, yo, Trey, I'm not at 150, my agency's not at 200,000, then cool. We have other options. We do have lead packages. We have a lead partnership package where we definitely will help you out and help you grow, where you could come in and we could work with you and actually like give you, but you once again still have to have an agency. Maybe you're not at 200 or 250, but you're at like, 80, 100. You're kind of pushing that and you're like, yo, I can't afford, blah, blah, blah. They're like, cool. We can get you guys in, partner up, help you guys. We'll get everything written and contractually. Once again, it's not to sell you. I'm just here to let you know, for those who've been watching me for 42 minutes, I appreciate you. I do these videos because it allows me to ramble and get my thoughts out, but also talk through things. Like the conversation I had with a client was, they text me, they said, yo, Trey, what are your most profitable agencies doing? And I literally was like, mortgage, right? Facebook form IULs and Facebook form filing expense. And he was like, wait, so nobody's doing that? And I said, no. People are doing well. You asked me about most profitable clients or agencies, i.e. doing. And that's what the agency is doing. Now, there are individuals crushing it, yes. But to me, like if 4 or 5 people are doing it, that's not big, right? But we have agencies of 15, 20 people. So because we have those bigger agencies, I look at the grand scheme and who's profitable. That's all I focus on. So at the end of the day, like all these numbers and stuff mean nothing to me if you're not actually making money. So it doesn't matter. It has to make money. It has to make sense. So please like, comment, and subscribe. Thank you for you guys' time. I will see you all on Monday. Have a great weekend.